Hello, welcome to my YouTube channel. This is the Captain Gala FX, your number one mentor, online forex mentor. Now, today, as I promised you that we are going to talk about risk management. Risk management is what makes somebody to be a better trader because everybody has got knowledge outside there about forex. You can always develop a strategy, but if you don't do proper risk management, you will not be able to earn anything in forex. Now, risk management is the most important thing in forex trading. Without a good risk management, you can never make anything in the market. Without any good risk management, you can never make anything in the market. That is why risk management is very key in forex trading, and that is what you need to know. Because uh, let me write it. That is the risk management. Because the main aim in forex trading is the main aim is to maximize profit. The maximize profits. And how do you maximize profit? By grabbing loss of pips in the market, loss of pips in the market. And how do you grab this loss of pips in the market? By staying longer in the market, staying longer in the market. And how do you stay longer in the market? How do you stay longer in the market? By doing what we call proper risk management. When you're doing proper risk management, which means you don't expose a lot of your capital into the market. That is why it is always advised that don't always expose a lot of your capital into the market. Just expose a quantifiable capital, and you have a reasonable risk to the market. Do a proper risk management and have a reasonable risk to the market. Don't just enter in the market you want to risk because it is a forex trading platform. You just want to trade. Make sure that the risk exposure of your capital in the market is very minimal, as much as possible. Now, how do you manage your risk? Managing of risk in the market. Managing of risk basically means protecting your capital in the market as you try to grab a lot of pips in the same market, or as you try to grab a lot of profits in the same market, which means your number one aim of the market is not only to make profits in that given or that particular market, but also to look at how you are protecting your capital. Protecting your capital in the market should be your number one priority. We are always told that you protect your capital as much as possible. Now, how do you protect your capital? First, when you're creating account, look at the type of account you're creating, the type of account traded, and mostly I will always advise for you to manage your risks. This is very easy with a standard lot account for the beginners, standard lot account. Then the second thing you should be looking at is the leverage. The second thing is the third thing is the SL and TP, which means working under risk reward ratio, reward ratio. And another thing is locking of profits in the market. Locking of profits in the market. Locking of profits in the market. Another thing is avoid overtrading. Avoid overtrading. That is another thing. Percentage of risk to the capital. Percentage of risk to the capital. The capital. That is a quantifiable risk in the market. Another thing is identify key zone, exit zones. Have an exit plan in the market. Have an exit plan in the market. And that is very advisable. It is very advisable to always have an exit plan in the market. Now, these are the risk management techniques. The first thing I've told you that you know the type of account. If you are a beginner, always create a standard account. That standard account will help you a lot on the risk management part. The next thing is the leverage. Look at your leverage. The third thing is SL and working on the risk reward ratio. And I will show you on what the risk reward ratio means. Another thing is locking your profits in the market. Avoid celebrating what is not yours in the market. Another thing, avoid overtrading and look at the percentage of the capital you are exposing to the market or your risk exposure to the market. Look at the percentage of risk or the risk percentage you are having in the market, or look at the amount of risk you are risk you are giving to your capital in the market. That is what is very, very important. If you have done this and have an exit plan in the market, what is your exit plan in that given market? That is very, very, very important. You always have an exit plan when the market goes bad, because forex market, you cannot be 100% sure of what the market will always do. You always have to try to work on an exit plan. When you are trading forex, you always have to work on the exit plan. What is your exit plan in that given market? Exit plan yako ni gani in that given market? That is something which is very important and you need to work on it. Exit plan is very important and you need to work on your exit plan. Now we are going to start. How do you use leverage on managing your risk? I had already said that leverage is just a debt which is offered by the broker, which is offered to you by the broker. Leverage is just a debt which is offered to you by the broker so that you can create large positions in the market without necessarily having a lot of capital in that given market, which means leverage is always expressed in ratio form. Let me say you have a leverage of 1:500, and I will always advise you use a standard leverage of 1:500 or 1:400 for the Kenyan brokers. Or for the Kenyan brokers, you will find that they offer leverage of 1:400 because of the requirement by the Capital Markets Authority, CMA. Now, leverage is always expressed as a ratio form, which means 1:500. Some people might take a leverage of 1:200. What does this mean? The broker tells you that with a $1 you can be able to control a position in the market of up to 500 USD, which means if you deposit $10, this broker is telling you that you are capable of controlling up to 500 times 10 USD in the market, which means you are able to control a position or a greater position of up to 5,000 USD in that given market. Unanielewa? Now, when the broker is offering you too much leverage in the market, it means that the risk exposure to your capital is also high. You will always get a lot of money. You will get profits faster because there's a lot of exposure of your capital to the market, which means you will be able to get a lot of you'll be able to earn profits very faster. But remember, in the process of earning those very many profits, you are risking a lot of money in the market. Your risk exposure is a lot. It is like you are gambling. When you're using a lot of leverage, it is like you are gambling. That is why you are always advised to use a standard leverage. Let me say like the broker is offering you a leverage of 1:1,000. Remember, when you are creating bigger position, because when the broker is telling you that with $1 you can be able to control 10,000 USD in the market, that is a lot of risk, which means when you're going to make money unaenda kutengeneza pesa very fast, but when you are going to lose money you're going to lose money very fast. Inamaanisha, it means that you always advise, because our number one priority in the market is to maximize profit by minimizing risk. And when you want to stay longer to maximize profit, for you to maximize profit in the market, you have to stay longer in that particular market. But by staying longer is by minimizing your risk as much as possible. That is why your exposure of capital to the market must be reduced with as much as possible. And one way to reduce your exposure of your capital exposure to the market is by minimizing or reducing the leverage amount you are being offered. Remember, the market will always move on a zigzag. The market will never move on a straight line. The market will move on a zigzag. When you create a position or when you use a high amount of leverage and the market always comes to the pullback level before going into the other direction, inamaanisha when you're using a high amount of leverage, before the market goes to your direction, you shall have been stepped out, because there's a lot of risk exposure of your capital into the market. Even in business, the higher the capital, the higher the amount of profits, the higher the risk. But remember, in Forex, it is different. In Forex, the main important thing we are looking at in Forex is just to minimize those risks in the market. And by minimizing the risk in the market, it is minimizing the risk exposure of your capital. And by minimizing the risk exposure of your capital into the market, ni kutumia leverage kidogo sana. Before you are stepped out, when the market is stepping you out, you will find that some people are still earning a lot of profits in the market. Wewe unapata that the market has already stepped you out and you are running in serious negatives in the market. That is why you are always advised to use a minimum leverage as much as possible. Stop being misguided by mentors who don't know even what they are doing in the market. There are some mentors who always even don't know what they are always doing in the market. Stop such mentors in the market and focus on yourself by doing what we call proper risk management in that given market. Now, working on a risk-reward ratio. What is risk-reward ratio? What is the risk-reward ratio? Risk-reward ratio is always the stop loss pips to take profit pips. Which means, let me say your stop loss was 50 pips, and your TP is about 200 pips. Now your risk reward ratio will be 1:4, which means this risk reward ratio means that when you are going to lose money in this market, you're going to lose times 1 the margin. You're going to lose times 1 the margin. But when you are going to earn money in this market, you are going to earn times 4 the margin, which means when you had a capital of 100 USD in the market, inamaanisha when I'm going to risk about 20 USD or 10 USD in that given market, 10 USD at is too much. 10 USD at it is too much to risk in the market, which means I'm going to lose 10 USD when I'm going to lose this market. And when I'm going to earn 40 USD per trade. Yes. Now in a day, let me say I've taken 2 trades. With the 2 trades in a day, I'm able to earn up to 80 USD profits. That is why you are always advised, don't try to ever, and don't be cheated that you are ever trying to flip accounts in Forex market. Don't try to flip account in Forex market. Yes, you can flip accounts because there are very many people flipping accounts in the market, but it is never sustainable. Flipping accounts is neither, it is not sustainable, which means that today you might be flipping that account. Today you might go ahead and flip account. What about tomorrow? Tomorrow you'll end up losing all that amount of money in the same market. You will end up losing that all amount of money in the same market, which means the next day you are going to deposit the profits you earned the other day. Hivyo utapata like uh, uh, your main work is just to return the capital or the amount of capital you had already earned from the market. Wewe kazi yako itakuwa tu ku return the amount of capital you already earned in the market, which is not advisable at all. Try as much as possible to use a good risk reward ratio. And I've told you that risk reward ratio, don't go for a risk reward ratio. How do you use risk reward ratio in forex and in risk management? This is how you use it. I've told you that don't ever accept any risk reward ratio which is below 1:1. That is should be the standard risk reward ratio, 1:1, which means you can be able to lose ×1 the margin, ×1 the and ×1 the margin. But when you are getting a risk reward ratio of 1:0.5, you will get that you will be earning less than what you are willing to lose, which means you are willing to lose a lot of money in the market than the amount you are willing to earn, which is very poor trading strategy. That is a very poor trading strategy which is not advisable to any trader. And any trader which is using such trading strategy, that is a poor method or a poor way or a poor method of trading which is not advisable for a serious trader in the world. You are always advised to maintain a risk reward ratio of 1:1 and above, because when you are going to trade under a risk reward ratio of 1:0.5, which means you are willing to lose more than you are earning. And very many people, you are willing to lose more than you are earning. And very many traders outside there, this is what they do. They always lose a lot of money than they can earn, because they don't know the risk reward ratio they are trying to use in the market. Always establish a risk reward ratio, measure your pips from the TP, the amount of pips you are willing to lose and the amount of pips you are willing to earn, and focus and put your trade efficiently. I've talked about risk reward ratio. Lock your profits. Locking your profits. I always told you that locking profits is the most important thing. Forex market will never move on a straight line to embrace you. Forex will never move on a straight line to Forex will always move on a zigzag. Now, what you are required to do, some people will always tend to celebrate what is not theirs. Like, let me say I gave you a signal, and that is very many traders do the same mistake. Even the big traders, mostly these people who call themselves mentors in the market, they always don't know even what they are trading under, which is a very poor trading strategy. I will always advise you that when you see the market has moved 50 pips above your entry, has moved 50 pips above your entry, where your work is just posting screenshot the way you are in deep profits, you are in deep profits, then after 1 hour the markets will come back and put you in huge drawdowns. Now, to avoid that, always modify your SL. Modify your SL by doing what? Let me say by locking your profits. Let me say you entered the market to these given zones. The market has moved into profits to your TP, into your direction. Let me say your SL was here. Move your SL with your market some 5 pips below your current market price, so that you can lock these profits in a way that when the market even tries to go back to against you, the market will find that you have already backed that profit. That is something which very many traders don't know. Or they know, but they always avoid, because thinking that the market will always celebrate you as you go in the same direction. The market will never give you that chance. That is why you are always told, and it is by force. You are always told that always lock your profits so that you can able to secure those profits in the market without pressure in the market. You will be trading without any pressure. The market will never give you any pressure when you are trading it. Kindly always lock your profits by modifying SL. Not closing trades, but modifying XL. Moving your SL from one point to the another, which means locking those profits you have earned. Now, don't ever celebrate what is not yours, because when you are celebrating, you are in a deep profit and you have not lost those profits. The market will always come back, sweep you away, and guess all those your profits you are celebrating. Always try to lock your profits so that you can be very safe in the market. Yes. That is good. That is good. I will try to go very fast because I don't want this video to go for a very long time. I'm trying to shorten it. There's something called percentage of risk to the capital. I will always repeat, don't risk more than 5% of your capital in the market. Don't risk more than 5% of your capital in the market unless you have locked the first profit. Unless you have locked the first profit. Let me say the market was in your direction with about 50 pips. Lock the other profits and enter new entries. Always make sure that don't risk more than 5% of your profits in the market. Another thing, there is something called exit plan or exit zone in the market. Let me say the market was moving on a Fibonacci retracement. The market was moving on a Fibonacci retracement levels. These are levels. You know very well that these are levels or pullback levels. Let me say you are trading on a buy. Then the market has broken this zone and retested. Some people will still be holding this market on a buy. And this market has given you an indication that actually I've changed a structure. Unanielewa? Actually I've changed a character. Let me say you started trading this market, we've started buying this market from this zone. This market has reached this zone and it has broken the lowest point of the pullback, which means that broken this zone, it has broken this zone and retested the same zone, and you are in deep profits. Don't wait this market to come back and sweep your profits. That is a change of character, which means this market has changed from moving on uptrend to actually moving on a downtrend. Immediately you see this and you are in profit, go ahead, don't hold that trade, but actually go ahead and lock those profits with immediate effects, and you will be very safe in that given market. Go ahead, lock those profits, and you will be safe. But when you still be celebrating those profits, thinking that the market will be there waiting for you, you will be very wrong about the market, and the market will always tend to punish you. The market will always tend to punish you. To avoid that punishment in the market, always try very hard to check what is the market doing. When the market has changed a structure or has changed a character or has broken a zone, always know the exit plan of that given market. We don't wait the market to come and sweep all your profits which you had made in the market. The market will always come back and sweep all your profits. Don't wait for the market to always do that for you. Always have an exit plan, and if you have seen that, always just exit that market. Don't wait the market to sweep your profits, guys. And always avoid overtrading. Overtrading, somebody wants to always trade in the market. Somebody wants to trade everything, because there are some people who always go there in the TikTok live, they get some mentors. Some people are not even serious kwanza with their life, where you will see people trading there and you will always make noise. Let us trade. Oh, let us enter buy, let us enter sell. You are selling or you are buying a market which you don't know even which origin. How do you want to trade a market which you don't know? How do you want to trade a market which you don't know? Always trade a market which you know. Don't enter a market because people are trading in the market. There are very many people trading on demo accounts. Some people are trading on demo accounts and you are busy making noise in the market the way you want to buy or the way you want to sell that given market. try to understand the origin, how this guy has analyzed the market. Is it conforming with your analysis? When it has conformed with your analysis, kindly enter the market with a lot of confidence. Guys, that one was my time on risk management. I will still teach you a lot. There's a lot to be learned for you to learn on the risk management, and I will always be giving you all those tips wherever you need them. Kindly go and subscribe to this YouTube channel, share this video, like this video, and also I offer mentorship. As I already told you, 50 USD online, physical is 150 USD. I will be pinning my number here. My number is 0706 206 333. 0706 206 333. It just WhatsApp me on that number or call that number for you to join mentorship. I also have free Signal group, and there are two ways to enter in that group. It is either you create account with my link on Exam, because Exam is the best broker, or you pay me 2,000, which is 20 USD dollars, to my number, and you send me the screenshot via the WhatsApp number so that I can add you to the group. That is a free Signal group. But if you have created an account with my link, there is no need for paying, because you will be offered free Signal in that given group. Now your work is just to go in the comment section and click on that link so that you can join the trading community. Thank you, and that one was my time. Bye bye.